What's up guys, Austin here, and in this video we are going to be having a conversation about how I do not have the PDT rule applied to me and I trade the US equity markets and how you can make that work for yourself as well. What's up guys, Austin here, 7-figure entrepreneur and day trader. I've been day trading over half a decade, own multiple businesses in the trading space, and this is what I have to share with you to make your journey just a little bit easier. So you could totally day trade with under $25,000, and the whole rule, PDT, it's called the pattern day trader rule. So it's you can't take X amount of trades with under $25,000 in your account based on that rule. And that rule only applies to stocks and options. Now there's little things people will do to try to circumvent that rule, but the best way to do it, the best way to completely avoid PDT and still be able to trade an equity market is to trade futures. So with futures, there is no PDT rule whatsoever, and you're still technically trading the stock market because you actually are trading the stock market. And there's some brokerages out there that will not accept any customers unless they put $35,000 in an account. And that has nothing to do with PDT, because PDT is $25K. That's purely a filter just to get the right type of clientele. Futures is super slept on. So futures, people don't really know about it as much. I mean, obviously maybe people have seen the term futures, they've been aware of it, but they don't really understand it. So futures in a nutshell is trading an entire asset class under one product. So you could trade S&P 500 index futures and you're just trading the entire S&P 500 index rather than buying Apple or selling Microsoft or doing whatever trades based on specific equities. You're trading the index as a whole. It's actually really funny because if you do want to trade Apple, for example, you should really just trade the S&P or the NASDAQ futures product, because the price action is basically the exact same. So it's you're trading almost the same chart, but you're not. It's a little different. So I personally like to trade futures, not because of the capital requirements, just because of the nature in which the products move. They provide very consistent opportunity. They're very reliable products. You don't have to deal with a lot of weird shit, you know what I mean? It's very straightforward. The brokers are very legitimate. It's a really good product to trade, and a lot of people, people have been trading them for decades. It's not a new thing at all. Back in the Chicago pits, people used to trade them just on the stock exchange, with the tickets and that whole thing, that movie Eddie Murphy, Trading Places. That's in the futures exchange in Chicago. That's the Chicago Mercantile Exchange. That's where futures are traded even today. It's not the same style with the pits, it's all computers now, but whenever I place a trade on the NASDAQ, that order goes to the CME. So it's that CME was where they were, with Eddie Murphy and Dan Aykroyd with the tickets and everything like that towards the end. So futures are a great product to trade because you can capitalize on stock market movements with under 25K in your account, and you can take as many trades as you want and there's no restriction behind it. Margin requirements are super low. Leverage is really good. It's a great asset to trade, and it's very consistent and produces a lot of consistent opportunity. Very reliable products. I think a lot of people sleep on futures because they are geeked out by the word future. They're like, bro, am I trading some shit in the future? Some shit that's not in the present. You know what I mean? They just get overwhelmed by the word futures and think it's really confusing, but it's no different than trading anything else. You just need go on a broker that trades futures and place your buy orders and place your sell orders, and it's the exact same. You don't have to deal with anything like options with Greeks or IV or anything like that. It's very, very straightforward. It's a very, very easy and normal product to trade. People just think it's very intricate because of the word attached to the end of it. It's really no different than trading a stock. It's much easier and less restrictive. A prop firm and futures are totally separate of each other. So there's prop firms for all sorts of different types of asset classes. There's prop firms for futures, there's prop firms for stocks, there's prop firms for Forex. A prop firm is just a company that is willing to fund traders for a percentage of their profits. That's all a prop firm is. Futures is an asset. It's an asset class. It's a type of products that one can trade. Whereas a prop firm is an organization that provides capital to traders for a percentage of their profits. You can use prop firms to trade futures. So there's prop firms that people use to trade stocks. There's prop firms people use to trade Forex. So it's very hard to get funded by a prop firm for stocks. It's not as common. There's way more regulation to go through for the following reasons. Stocks is governed and regulated by the SEC, the Securities and Exchange Commission. They're very, very strict and stringent, whereas futures are regulated by the NFA and the CFTC. So two very different governing bodies, and they have very different sets of rules behind them. So they're a lot more lenient with prop firms for futures than they are for stocks. I think futures is definitely the way to start compared to stocks or options, 1,000,000%. Multiple reasons. No PDT rule, prop firms. You don't have to scramble to find a different stock to trade every day. You can trade the same product every single day. Great leverage, very legitimate brokers. So to get started with futures, you just open an account on a brokerage, fund the account, and then begin to trade. You could use their simulated platform to learn the ins and outs of the platform, and then learn a strategy and start trading it live, or you could sign up for a prop firm and start taking a funding challenge on a prop firm and go from there. By no means is it easy to trade successfully. It doesn't matter if you're trading stocks, options, or futures, or Forex, or crypto, or whatever. There's nothing about consistent, successful trading that's easy, but getting started trading a certain product is not that difficult, and it's much easier to trade than something like options, because options have a lot of dynamic variables, such as something called the Greeks, which I'm not going to get into right now, but it can affect the value of your position outside of your control. With futures, that never happens. You can hold the trade for a minute, 2 minutes, an hour, a week, and it's going to be fine. Futures, they expire every quarter. Maybe that's something that confuses people about, and they move on to a different contract, but literally the only thing that means is, for example, right now I trade the March contract for the NASDAQ. It means absolutely nothing besides that is the contract that has all the volume right now. So when the March contract expires, I will trade the June contract. And the only thing that means is, instead of me trading NQH 2023, I'll trade NQU or J or whatever the code is, 2023 on that at the end, and that's it. That's like, there's really like nothing confusing about it. It's just basically you're trading the same product under a 1-letter difference because all the volume shifted over for each quarter. It's very straightforward. That might sound a little confusing, but like literally, like the only thing I mean by that is, if you're trading the NASDAQ, you're gonna trade it with one extra letter attached to the ticker symbol for a whole quarter, and then the next quarter you're gonna trade the NASDAQ again, but with a different letter attached to the ticker. That's all it means. Like, there's no difference. It doesn't move any different, nothing changes, the value, everything's the same, it's just a different letter at the end. That's all it is. So if you like what you saw and want to learn more about prop firms, we actually did an entire breakdown on how they operate and everything else in this video right here, so make sure you click that and educate yourself on how that works.